Okay, no reverb, that's good. 5 o'clock Tuesday, September 15th, I'd like to call to order the Administration Committee meeting. Let's start with the roll call.
Yeah. Supervisor Long.
Present?
Supervisor Cook is absent. Supervisor Ard.
Present.
Supervisor Peterson.
Here.
Supervisor Peavy.
Here.
Okay, and we we have 2 minutes to approve. Were there any comments or corrections and changes on the minutes? All right, hearing none, they'll stand as approved, as published. Public comment. One of these days, maybe, you never know. I guess we're fortunate we're not Health and Human Services right now. Okay, let's move on to business items. Ken, you're on for the financial report.
Thank you, Chairman Long. So we'll skip down a couple pages here, get to the financial report. We should be at 33% right now, budget remaining. So if you see the column on the far right, and you see 33%, that means we're right on target. If you see a number that's higher than that, on a revenue, that means we're a little behind on the revenue collection. With a lot of grants, that's typical. And then if you see a larger number on the expense side, then that's a good thing. That means we have more budget expenses remaining. So there's capacity left in the budget. So we'll take a look at one of the budgets here. So county board, so your revenue is the general property taxes, you're right on target with that. And then if you look at your total expenses, there's 44% remaining. So that means there's still capacity in excess of the time frame of the year that's left. So when we look through all of the budgets, you're going to see about the same thing. Revenues are right on target. Expenses are doing very well. They're either at the 33% or better. So I don't have any issues with the current status of the departmental budgets. The HRA, I will point out though, that one is over budget now, not the HRA, our HS. So this one is over budget, so we budgeted $200,000 and we're already at $339,000 for the year. This is that retiree payout. So it varies from year to year depending on how many retirees we have. And so there are more retirees that have not posted to this yet. So we will be at least double this, if not more. When we get to the fund balance analysis, I'm going to talk about a plan that we have to maybe address that issue. So sort of keep that in mind. And work comp, when we look at the work comp, liability is looking good, but the work comp is also not faring well. We're over on the budget on work comp. There was a very large claim at the beginning of the year that we settled, and then we have a large claim that's still ongoing. That's been about 2 years now ongoing, but the employee just had another surgery, so those costs just keep racking up. We're close to our cap on that, but we get reimbursed at the end. So if it costs us $800,000 like the last one did, then we don't get reimbursed for that excess of our self-insured retention of $550 until the very end of it. Skip through facilities. When we look at the sales tax for the year, so $890,000 was the June collection that we received in August. So the previous 2 months were both records for us, the first and second highest months we ever had. So June was not a record for us, but it was still the 6th highest we've ever received. So of the 6 months this year, we have 3 of our top 6 tax collections ever. And so in the last 3 in a row are in that top 6. So sales tax is still very, very strong. So we have not seen a decrease there. And then the KIP projects, everything's on target there. Any questions on the financial reports that you had?
Supervisor Peavy.
Yeah, just follow up. Didn't you say at one last meeting we're going to get rid of the highway one? Since that's completed, that'll come off of here.
Yeah, by the end of the year, it will come
Okay.
off. Yep. So they have that money spent. They just haven't posted those expenses yet for it. So Robbie assures me that he spent everything.
Any other questions?
On the sales tax, I see that June was down a little bit from the previous year, but you don't think that's a bad indicator? Or?
No, you'll see fluctuations from month to month. So we have a different high month every year. And so maybe the last 2 years that was the high month, but the year before it wasn't. So an individual month compared to the previous year of the same month isn't necessarily a good indicator.
Thank you.
Other questions? All right, let's move on to number 2. Resolution retaining ownership of the Apple River property on County Highway H.
This was recommended by the Community Development Department. So the history on this property was we foreclosed on the property for back taxes. And that occurred in November of 2019. So we had taken ownership of the property, and then in January, I believe it was, the property started fire. I think it was the previous owners were still in the property when they weren't supposed to be, and they didn't have any electric or other heating sources. So the heating source they were using ended up causing a fire. Luckily, nobody was injured in that, but the property was pretty much totally destroyed. We came in later this spring then, or early summer, and we totally demolished the structure and restored it to a flat surface. Since we had taken ownership of the property, it was covered under the county's insurance. And even though we have a $25,000 deductible and the structure wasn't worth very much, what we did receive from insurance proceeds was enough to offset our total cost, both of the back taxes that were owed and with the demolition of the structure. So the county has come out whole dollar-wise on this property. We had a request then from community development that it was a very nice looking property along the Apple River. It's separated, it's about 10 acres total, I think, but it's separated by the river, with most of it on the other side of the river, inaccessible by foot. So it's a very narrow strip along the roadway and the river. The house sat very close to the river and wouldn't be allowed under current zoning, although you would be grandfathered to build a structure in the exact same footprint of the old structure. So it would be buildable within that same footprint. And we have those property corners marked, so that's a possibility. But community development recommended that we retain the property for the parks and allow for public access on this site. So a small parking lot could be placed on the property, and there's quite a bit of river frontage then that would be available then for public access. So I look at what's the cost to us. Well, there's no cost because we've already purchased it basically. It's the opportunity cost, the lost revenue that we would have if we sold it. So what's the value of it? I don't know. It's kind of hard to say because it does have some building restrictions. It wouldn't allow for a very large house to be built on it. A lot of it's inaccessible. I would guess somewhere in the tens of thousands range. I don't know if that's 20,000 or 80,000, but somewhere within that realm is where I think the value is. So it's really now up to you to recommend to the county board what you think we should do with the property.
Comments?
After our recent experience on the St. Croix with the non-conforming property, I would think that a bird in the hand is worth two in the bush, and it's a very good idea to keep this property. Who knows if somebody bought it and then decided we were trying to restrict them from enjoying it however they should be able to. So I'm all for keeping it and make a nice access for folks.
And, yeah, there we go. The property, if you have been out or buy it, it's a nice piece. It would make a nice area as an addition, whether the county keeps it or whether it goes to WDNR. It would be fantastic. The fishing is actually quite good in that area, and doing the parking lot, as our interim administrator suggested, or as it was suggested by CDA, you've got just enough room if you're kayaking on the Apple or if you're fishing. This makes a great addition to our parks and trails. And perhaps in the future, on a future grant, then a bridge could be set up across the river to allow access to that smaller parcel, which would afford a nice picnicking area. But this is definitely something that we should be hanging on to.
I would agree with that, and actually I'll move that the resolution be approved to retain ownership of the property.
Second.
Any further discussion? All those in favor, say aye.
Aye.
Aye. Any opposed? Motion carries unanimously. Okay, we'll move on to item number 3, a resolution adopting personnel policies. And I see Tara's with us today, I believe.
Ken, do you want me to go ahead and start?
Yes, please do.
Okay. As usual, I'm here if there's any questions. I did just want to make a couple comments regarding this group of policies. I think we've discussed in the past that all of the policies are vetted through both our employee group, which is staff advisory, and department heads, as is noted on the resolution. And overall, the feedback for the changes and edits to these policies has been very positive. I feel, to be transparent, I did want to mention that there had been some questions / concerns regarding the bereavement policy, whereas most people were very favorable of the majority of the changes. The one concern was the hour allotment. So currently our policy allows 5 days or 40 hours for the death of certain family members, such as a child or a spouse or a parent. And this new policy, a proposed policy, allows a set bank. And where the concern is in the past, if unfortunately a person was to lose both parents or a child and a spouse in the same year, they would have been allotted up to 80 hours of bereavement leave. The new policy puts forward a bank of hours of 56 to be used for whatever familial relationship that an employee wants to use it for. So what we did in response to those questions or / concerns was we added I guess you could call it a clause or a statement in the policy that allows for, in extenuating circumstances, an employee to have in excess of the 56 hours for certain circumstances with the approval of the department head, the HR director, and the county administrator. So again, if for some unfortunate reason an employee loses multiple family members within the same year, we could look at that and potentially allow more than just the 56-hour bank. Aside from that, everyone that we've heard from has really liked the changes to the policy.
Supervisor Peterson.
I noticed that apparently removed was the report that you would give if there was a increase in excess of 5%. Would you just maybe comment on that, Ken?
Or Tara, which policy is that in?
I think he's referring to the salary administration policy.
Okay, let me get to that.
316.7, explanation there, page 56. Article 6.
Sure. Yeah, so in the past, that's been an informational item that's presented at the end of the admin committee meetings. We weren't sure that there was a lot of value in that because there was no, you didn't vote on it at all. It was after the fact. So if you still want those reported, we can, but that was why it was taken out, was we didn't know if there was value in just reporting it.
And I think also, if I may add, Ken, we changed it so that hiring managers are not, I guess, restricted to just doing a 5%. It's based on the qualifications and experience of the candidate, just like it would be if they were hiring from the outside. The feedback that we received was that some employees felt it would be better for them to actually have to resign from the county and be rehired to get the wage that someone from the outside would get, because they were restricted by the 5% because they happened to be a current employee. So we removed that from one of the other policies. And so this seemed to go along with that, to not have that still be part of the process.
Any other questions or comments for Tara? I'll go ahead and move that we approve the resolution adopting the personal policy changes. Any further discussion? Seeing none, all those in favor? Say aye. 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 Any opposed? That passes unanimously. Thank you. Thank you, Tara. Okay, we'll move on to number 4, the resolution authorizing the fund balance transfer. I'll let you kick it off, Ken, and then I'll add some commentary.
Sure. Thank you, Chairman Long. So I wanted to start with the review of the charts on this. So the upper left one is the general fund. So we have a 35%, and then we have a target range. So we don't hit right at 35, but with plus or minus 3%. So you can see that bandwidth that we run, and we consistently run over. So the amount that we have is over. The amount has been decreasing the last couple of years. Really, that's because of reallocations, though. So the last few years, we've been coming back, we've been looking at it, and we've been moving that excess over to other things, either to debt service, to KIP projects, to the RHS fund. So other purposes that excess has been moved on to, and that's part of this recommendation also today. If we look at the HHS fund balance, they're staying within their targeted range of 10% of their total expenses. So that's good. I can tell you that other counties aren't as fortunate as our HHS department has been, staying within that range. If we look at the highway department, they had kind of a spike up. It's a bit of an anomaly. It was related to their equipment replacement and reduced construction projects, kind of both worked inversely to have an increase in the fund balance. Most of that is in their equipment replacement fund, which they plan to replace some of their older fleet very soon, so that'll bring that down. They have an excellent system here in St. Croix County with the highway department. The way that we fund projects, a lot of other counties are struggling to buy equipment, or they're bonding to do construction projects. We have a self-sufficient system here, so you should be proud of the design that we have. When we look at the health center then, over to the right of that, they are still negative. We want to get them up here into this bandwidth. But the good news is that that negative amount is getting smaller. So we will get there eventually. In prior years, way back when they were positive, those were subsidized by tax levy dollars, or additional dollars were reallocated over to that. So we stopped doing that because we saw that the trend line was going in the right direction. And so we have not been reallocating fund balance to this. So they are doing this all on their own. So they are getting back to positive territory, I would guess, by next year. So when we look at the RHS fund, so again, this is that retirement health savings. So when an employee retires from the county, they're able to cash out their long-term sick bank for future medical expenses. This has continuously plunged into the negative amounts, and the only reason it's staying positive as all is because we're reallocating dollars into this. So this is one of the ones that we do need to address. It is not being addressed in the current fund balance transfer that we have, but we have a different idea for that, which we'll get to in just a minute. And then the health insurance fund, that's doing very well. I mean, that balance is well in excess of where we need to be from an actuarial recommended standpoint of 25%. So I would say that's good. The Workman's Comp, we had dipped the prior year. It had come back up a little bit. It'll probably dip back again a little bit this year with our large claims. This we do want to get back up eventually, but I think with a couple of good years that'll fix itself. And then the liability insurance fund, that one is continuing to do well. Also, the trajectory is up on that liability fund, although we do have a large settlement this year that we're going to pay for. So there probably won't be much of an increase next year in that total balance. Let's see if I have it here. I don't. So the other fund that's not represented by these charts, but the idea that we have is the HRA fund. So the HRA is a partnership fund with the health insurance fund. It's a separate fund. We were funding the HRA a fixed amount per employee. We were putting in, and our medical insurance plan used that to cover the deductible. So we had phased that out in 2020. So we stopped contributing any monies into the HRA in 2019. Any balances remaining at the end of 2020 revert back to the county. So we are going to have a residual fund balance in the HRA fund. Keep getting my initials mixed up. The HRA fund is going to have a balance of probably in excess of $1 million that's remaining. So there's two places that I would recommend potentially for that to go. One would be the health insurance fund because it's related to the health insurance, although that fund balance is fairly strong, so it's not really in need of it. The other place we could look at potentially is the RHS fund, which is Retirement Health Savings. So again, it's health insurance related. It's only for retirees, but the HRA was originally created as a pool of money for employees to use for health insurance. So it is staying within the same theme of where that money was originally allocated for. And that will help address that negative fund balance that we are going to end up with at the end of 2020. Will be at least $200,000 negative. And that will cover several years then of potential large retirement payouts that we would have. So I don't have that fund balance available until the end of the year. That's why it's not part of this fund balance transfer. But I wanted to give you a preview of it and explain why we weren't addressing the RHS fund with the current fund balance transfer. So what we are recommending on the current fund balance transfer there is two parts. We have $2.5 million that's available, 2.4 roughly. So $500,000 was allocated already earlier this year for the business loan program that we did. So that leaves 1.9 million remaining. And of that 1.9 million, the best place to place it is in the KIP. That has the best long-term benefit for St. Croix County because that will reduce future bond issuance, which will reduce interest expense and bond issuance costs. So long-term, that is the best use for it. There was discussion at the task force meeting about providing taxpayer relief by allocating enough money out of this fund balance to equal a $0 tax levy increase for the county taxpayers. So that's what's reflected with the $800,000 that would reach that goal. So the tax levy rate would not go up. The total tax levy dollars would not go up. The rate would actually come down. The difference the $800,000 makes on the average household is $17. So I wanted to put it into perspective for you what that means for the taxpayer. So if you didn't want to put it into the debt service fund to do that, the tax rate on the average household would be $17 higher than it is if you do put the money here. That's all I have. Now you can ask questions.
Well, I'll speak a little bit on the task force, because we had, obviously talked about how we can help small businesses. We came up with a loan program, and that's been fairly well received and pretty successful. And then on the flip side, we talked about, well, what can we do to try to help some of our taxpayers out? And this idea came up, and it was Ken's idea. But I thought it was a good one, because basically it's a way that, we talk about, well, we're all in this together, and this is basically a way that we can practice what we preach. We can try to help some people out on a one-time basis. So by allocating that, basically no one will see a tax increase for their 2020 taxes, property taxes from the county. So and I know the $17, I guess in my opinion, you could easily argue, well, it's not very meaningful. It's kind of symbolic. But I think there's probably a lot of other situations that it might very well be meaningful. I thought about maybe someone who owns a couple apartment buildings who has tenants who are struggling to pay their rent. And I think that there are situations that this will be meaningful. It's certainly symbolic. We're trying to take a leadership role in the county among the school districts and municipalities to try to help people out on a one-time basis. And as far as the 1.1 that will still go to the KIP, I wanted to point out that the KIP that we approved showed a fund transfer of $1 million. So it's still within the range of the KIP that was approved by the full board earlier in the month. So I'll make one more comment. I know this may be a little bit of a new issue that we brought up. You may not be comfortable with it, and I'm okay with that, but I would suggest that it's worthwhile to at least forward this to the full board for policy consideration. I think it's worthy of the discussion for the full board. So that's my take.
So, and I'm in favor of this, I'm not advocating against it. But for 2022, then, this would be a $34 increase, because you'd have to make up the $17 you lost, and then you'd have to have the $17 for the 2022 budget. Or would we only go back halfway?
Yeah, you have to understand that the 17 is a one-time artificially lowering next year. So it does come back, and then whatever that increase might be for the following year, you're correct, yeah. So
Everything being equal, it'd be a $34 increase in 2022.
correct, yep.
It would never be equal, but.
I see contemplation going on. Please comment.
Well, ladies and gentlemen, the way that I look at this is like many of the federal programs that I deal with, it's smoke and mirrors. That's what troubles me. It looks good right now. I love the way it looks. Residents of St. Croix County will take a property tax break anywhere they can get it. But when it comes roaring back at you the next year, that's fire and brimstone from the public. I think we need to look at this a little more closely to evaluate and perhaps do a little analyzing as to what do we see the property taxes going to be in the upcoming year. Will this come back and bite us, or will this make us the superstars of property tax? I really think that's a consideration we need to give, because right now people are desperate. They are hanging on to any piece of hope financially that they can. And I don't see that situation improving much over the next year unless COVID completely disappears. So I do not want to give the public a shining star and then take it away.
So would it be possible to do some reasonable projections as to how this may impact 2021? And that there would be taxes that would be paid in 2022, since this is a one-time. I know it may be hard to project, but is it possible?
Yeah, well, I think Bill's analysis is, really all the more that I'd be able to do with the whole spreadsheet. So we know the value of the 800,000 on the current assessment of the county and the average house value, so it's $17. So we know that next year it comes back up by that much, and then whatever the net new construction of the following year is what that addition will be, and all things the same, it'd be another $17. So if you look at, and that's total dollars though, so your tax bill doesn't necessarily mean it's going to go up by $17 or $34. What it means though is that the total dollar that the county is going to collect is going to go up by 800,000 and 1.6 million. So it'll be a $1.6 million increase in the total dollar value that the county is going to levy in 2021 for 2022's budget. But you're also going to have another, millions of dollars of equalized value growth. So that rate will still go down. Our trend of decreasing tax rate is going to continue. With or without the $1.6 million increase, the tax rate will go down.
Supervisor Peavy.
Yes, just so I make sure I understand. So the county share of the tax, we gotta remember, we're only talking about that. The county share mill rate will continue to go down. Of course, that doesn't mean people's taxes will go down, because it all falls back to equalized values.
Correct.
So our history has been, last 5 years? The mill rate has actually slipped, and it's fractional, but it's been going the right direction. And it'll just, $17 will make it go a little more down, a little bit less, but it will continue that way, that trend. I would be in favor of moving this forward and have the whole board discuss it. Our action here would just be to move it on to the full board, is that correct?
Correct, yeah. I'm pulling up a spreadsheet here. I'll tell you what the tax levy rate will be. So we are at $3.51 right now. And we will drop without the transfer to $3.32, which is a 5.28% decrease in the tax rate. And then it drops to $3.25 with this $800,000 transfer.
Supervisor Peterson.
Would it be appropriate, maybe if a motion was made, to move this forward to the board for consideration without recommendation?
That certainly makes sense to me, if that's possible for a motion.
I think I can have Corp Counsel weigh in
Yeah, I
on
think
that.
we'll need corporate counsel to weigh in.
Well, just because you forwarded it to the board doesn't obligate any member of this body to vote for it. The rules are a little different when if it's moved before the board, but my recommendation is if you want the county board to consider it, move it as you normally would.
It's going to be considered for the county board regardless, however many approve it or not. So going forward with this, we'll put it on the board's agenda for everyone to discuss.
And I think what Scott was recommending is that we go ahead and make a motion to approve.
No, we do.
So,
we
I'll-
would
I'll-
need to, yeah, we would need to move it forward with approval,
Right.
and then the county board will have it on the full agenda.
So I will make a motion to approve the resolution as it stands.
I'll second.
Any further discussion?
You'll need a roll call vote.
Okay.
Supervisor Peavy,
Yes.
Supervisor Peterson,
Yes.
Supervisor Ard,
Yes.
Supervisor Long.
Yes.
Motion carries.
Okay, let's move on to the number 5, resolution amending the 2020 county budget.
So this is a budget amendment, basically to take up the remaining balance of the amount that we'd allocated for the loan program. So the loan program ended on the 10th. There were 5 additional applications, which I'm assuming were approved. Tomorrow will be, maybe, potentially. Yep. So that would put us at 320. That leaves $180,000 remaining. So this budget amendment is reallocating $50,000 of that money for other economic development purposes. So we have in the packet a third-party marketing firm that we would contract with, which has, it's a variable cost, but it'll be somewhere between $20,000 and $30,000 for those expenses. And then because we had 180,000 available, I rounded it up to 50 because that allows for additional room for marketing. So whether it be billboards or radio spots or, Bill's face on the TV, whatever we think will sell St. Croix County the best, that's what we would have the option to do then.
This is another idea that came up from the task force. Basically, make an effort to contact businesses across the river in Minnesota to try to convince them to at least consider coming across the river and settling in St. Croix County, considering a lot of the unrest that's been going on in the cities. It seemed like a good time to try to take advantage of that opportunity. And then this would be, as Ken pointed out, contracted on it with a separate marketing firm. And basically cold calling. Now, I would say that I probably, no offense, Bill, but probably wouldn't want to see his face on a billboard. So if we would pass the resolution, I would be more than willing to amend the resolution down to 30,000, which I think is really probably a more reasonable number. I appreciate the flexibility, but I don't think that we would need to go to radio ads and billboards and that sort of thing. And I think the 30,000 probably would be more than enough to support this effort. Comments?
I'll disagree with you respectfully. Having worked with media and had to do media buys, it's expensive. If it's done well and negotiations go well with your representative agency, yes, you can get some amazing packages. If you're going to reach businesses, you're not going to do it with email blasts. You're going to do it with direct contact. That means that you are hitting them with radio, television. You're going to buy within their project market, perhaps even with the same radio stations or television stations or internet companies that they are using. Otherwise, you'll never reach them. So $50,000 is not an out-of-sight amount of money if you're going to follow this plan. And I would strongly suggest that that amount not be decreased. In looking at communities such as Appleton or Green Bay, their budgets were much larger, and they were very successful in landing companies to come into their area. St. Croix County is prime right now to go out and recruit these companies. And if you've been watching the news at all or the economic news, and you see that a number of companies that were once outside the Twin Cities area are now moving to downtown. That marketing campaign that was shot off by the city of Minneapolis and the St. Paul Chamber is amazing, and that's what brought them in. We can do the same thing, but I do believe giving them the amount of $50,000 to pursue this, there is language within the resolution that anything left over will go back. I think that's our safe bet to go with this if we're going to get the greatest result.
Gentlemen, what do you think?
Scotty makes sense. I guess I could agree with her.
I believe we should get the 50,000 in there, like Supervisor Ard said, it does return if it's not spent, so I would be in favor of adopting the resolution as, the budget, as stated, which is the 50,000.
Second.
Okay, motion and seconded. Any further discussion? So let's vote. All those in favor? Oh, roll call, it's a budget. I'm sorry, you're right. Good point.
Supervisor Peterson,
Yes.
Supervisor Ard,
Yes.
Supervisor Long,
Yes.
Supervisor Peavy.
Yes.
Motion carries.
Thank you. I will not offer an amendment. Okay, let's move on to number 6, County Administrator Report on Position Reclassification.
Okay, let me get caught up on our slides here. So part of the annual budget process is a report by the county administrator on any position changes that were made. So here's the list of those changes that were made over the course of the year. Most of these were made by my predecessor. The only one that I've made since I've taken over as interim is the highway department one, where we switched out a welder for a mechanic. All of these, though, are either cost neutral or cost beneficial. If they cost additional money, they would have to come back for a budget amendment. So that's one of the ways that you know that they're always going to be cost neutral when they end up on this list. So if you have any questions about any particular ones that we did, I have a reason for most of them, I think. But otherwise, these are fairly routine, and really what happens is the department throughout the course of the year says, you know, I could really use an extra mechanic. We have less welding to do and more mechanic work to do. Can I just get the extra mechanic now that a welder's retiring? So with the population, employee population base as large as we have, that's what happens.
Any questions? Good deal. Thank you, Ken.
So that's just a report.
So the next item then would be review of the 2021 budget request. Let the
Yes.
fun begin.
Yeah. So these are the departmental requests. So this was the initial request that came in August by each of the departments. And we sat down, Leah and I sat down with each of the department heads and have reviewed that. And then we go to the standing committees and sort of show you where they were at with their initial request. So if there's anything that you have a strong feeling for or against, you can let me know now before we get the budget finalized and I publish a notice in the paper and bring it before the full county board. I'd rather know ahead of time if something big needs to be changed. I don't think we're going to find any of those in here, but we'll run through them real quickly here. So Corporation Council, if you look at the first line of every budget, it's general property taxes. This is a good measure to look at how much tax levy is needed to support them compared to last year. So this is really the net increase for that department. So last year they were at 592,000. This year they're at 617,000. So now that we know that they have $25,000 increase, now you can look through their budget and figure out where those increases are coming in. We're going to have increases in total wages. This is reflective of the step increase that I have budgeted. I don't have a COLA adjustment. I have just a step increase, which is really what we've been doing pretty consistently the last 3 years. So that step increase is budgeted in this budget already. And then we look at the benefits, and health insurance is one of the things that we're going to see an increase in. So we have a 6.82% increase budgeted, and I'm fairly certain that's going to be our final number for our health insurance increase. So that is budgeted at this level also. You'll see some departments that have larger or smaller increases in their health insurance, and that's reflective of we budget down to the specific employee. So when an employee gets married, the health insurance expense for that department goes up. In big departments, you really don't see that fluctuation. In small departments with 4 or 5 employees, you can see that increase. So that increase is larger than 6.82%, reflective of somebody changing their health insurance plan over the course of the year. So we know then that total wages and fringes are up by $15,000, so $596 compared to $571. So a large chunk of their increase then is directly attributed then to wages and fringes. If we look over their operating expenses, we're going to see that it's fairly close to the prior year. So it's up by only a few $100s. So that's how, when I look at a budget, that's how I analyze it though. I start with that property tax, then I look to see where the changes are impacting, noting that wages and fringes are going to be up across the board. So stop me if you have questions, otherwise we'll start to speed up a little bit. So the county administrator's budget, so that went from $299 to $394. We really don't need to talk about that one anymore. Oh no, we do, huh? Yeah, so there's 2 main changes in this budget. One is the PIO was added in. So the PIO was not budgeted at a full year rate. When we did the budget amendment, we only added them for part of the year. So the rest of the PIO is budgeted here. And then I did add a $25,000 line item for other professional services. And these are things that I would like to start doing with hiring a strategic planner to come in so that we can do a full strategic plan, which was one of the goals that we laid out in the work plan. And then also the community survey, which we were able to fit under the grant. But things like that are things that I think we need a place in the budget for. And so this is the spot in the budget that I've created that. So if we're able to afford it, this is the place in the budget that those types of items would come out of on an annual basis. So those are the 2 main changes that are happening in the county administrator's budget. The unallocated budget, this is the contingency fund, so that's at $50,000 as it was the prior year. The health insurance fund, last year at this time, actually a little bit later than this time, we were presented with a potential large increase. They came in at the last minute and said, you know, you have a couple of really bad exposures. We think you should increase your health insurance by an extra $1 million, after I had already had the budget set. And so you see $1 million of fund balance applied last year. So that did not come into fruition. So those cases resolved without a lot of expenses. So we're back down to basically where we were before, with a little bit of an inflation factor built into that. So we took the $1 million off, added a little bit more, and that's where health insurance is sitting for us. So that's a good thing. I think we're doing well on health insurance for the year, although this year is going to be an anomaly because people's medical decisions are different because of the pandemic. When we get to the HRA, you'll see that this is zeroed out now. So we'll have no more future expenses. This is that one that's going to have a residual fund balance. We were just burning up fund balance this year. I thought we would use maybe up to $500,000 of the 1.2 or 3 that was in there, and we've really only spent about $117,000 so far this year. So that's going to end positive for us with a balance that's available at the end of the year for us to reallocate. The RHS fund, so this is that retirement health savings. So it's budgeted at $200,000. We had upped it last year from 150 to 200. When we look at our 5-year trend on payouts, the 150 number was good. It was starting to creep up, though. It was creeping up to about 180 on the average. And then we just hit these really high years. So last year we had ended at, the prior 2 years we had ended at 185 and 306 for total cost. And this year we're already at 339, and I know we're going to blow past 400,000 easily. So you have years that just jump out and are higher than other years. So 2020 is going to be one of those years. So like I said, we have a plan, a long-term plan for this, though. So I don't necessarily have to increase the annual allocation for it. On our property risk, so I do have a small increase in the total amount. This is charged back to other departments. We are seeing increased expenses for reinsurance amounts. So we're seeing double-digit increases the last 2 or 3 years in a row for our reinsurance. So we have high deductibles, and we have a healthy fund balance to cover those, but our reinsurance amounts are coming out with double-digit increases. So I did increase a little bit the total amount that we're charging to other departments, and that's reallocated and spread out throughout the entire budget already. When we look at Workman's Compensation, I have a small increase there. We try to keep that rate as low as possible because it's spread out and becomes a tax on the rest of the departments. And that fund is doing okay as long as we can avoid some of the large cases that we've had. So the first 3 years I was here, we didn't have any large ones, and then in the past year and a half, we've had 2 large ones. So. Under the county board, everything's pretty much the same as it has been in prior years. No significant changes there. Oh, that one was supposed to be Leah's. I'm going to turn it over to Leah now. So
I will start with county clerk then. I'll start with county clerk. So their overall budget for revenues went out by about 9,000. And then you can see their total salary and fringe went up by about 10,000. So that accounts for most of their increases. And then their operating just went up by just less than $1,000 there. So no significant increases there. The county clerk dog fund, that one has remained the same, so there's no changes there for revenues or expenses. For the elections, this one will change a little bit from the current year to next year due to the number of elections that are being held. So this one's probably a little bit more similar to 2019 with some slight increases. But overall, we'll go out. Overall, their revenues did go up by about 55,000, or went down by about 55,000, as did their expenses. So no huge changes there. For human resources, their revenues went up about 17,000. And then if you look at their salary and fringe, that went up by about 8,000 there to 7,000, 8,000 there. And then their overall operating expenses, those ones did go up by about 10,000. And the reason for that increase was due to a $10,000 addition that they made. And this one will be for the employee engagement survey that they plan to have next year. So that's the reason for that increase. For IT, you see their budget did go up quite a bit. Theirs went up, for the revenues went up by about 52,000. But a lot of their increases was due to salary and fringe. That one went up by about 44,000, and you'll see the large increase in health insurance on that one. That one's over 20,000 for that increase. Okay. And then their operating budget went up by only about $8,000, and there's some reallocations in there, but their overall budget for operating only went up by about 8. Okay. And then for finance, our budget only went up by about 26,000, and most of that was due to the salary and fringe that increased by around 24,000. So that's that one, and then the operating for finance that went up by just a little over or just under 2,000 for operating expenses. So no major changes there. And then for the default cost center, this is where the sales tax and shared revenues and interest is. So there's no expense in this cost center. It's just revenues. And then you'll see the negative property tax. That is the amount that is being dispersed to the other departments. Okay. So there's some increase there. Sales tax did go up by around 450,000. So there's an increase there, and then the other increase would be in the interest revenue. Hoping to bounce back next year. Okay, and then for the treasurer, their revenues went up by about 18,000, and you can see the amount going back to the other departments is 184, so that's actually down a little bit from prior year. And then their total salary and fringe, those went up by about 8,000, so not too significant. And then their operating went up by about 10,000, and they are switching over to a new tax software update on that, so that's the reason for that increase. Any questions on those? Back to you.
We're getting her trained in. She's doing good, though. The next one up is facilities. She didn't want to mess with facilities. So actually, Jim's budget is going down quite a bit. So you see a decrease in his total tax levy. And a large part of that is net wages and fringes, and there's an increase in interdepartmental chargebacks. So that's we're shifting some of the costs to the nursing home. That's where those costs are ending up. And so the nursing home is a revenue-based fund, but that's where the work is. As that building is filling up, it takes more to clean it and maintain it. So some of that cost is shifting over there. So that's where you're seeing that change. On his total operating side, it's pretty much the same as it was the prior year. It's up by about $2,000. So total operating costs are about the same as prior year. The fleet vehicle fund, that's in and out. That's an internal service fund where we charge back for fuel and vehicle usage. So that nets out to zero. And then the debt service fund. So we're at $6,087,000 of debt payments next year. So with the $800,000 and then with some other fund balance, we're going to alter this amount so that the total tax levy then is zero. So while you see the general property tax right now requested at the full amount, this is where you're going to see a change in the recommended budget. And that was it for departmental budgets. Have any questions on that? Anything that piqued your interest, things that you really liked or really didn't like?
I do have one suggestion. I thought it might be helpful if there was a summary page where it would just list out each department and kind of a one-page, here's the revenues, the expenses, so that you could get a feel for overall what it really looks like with all departments combined, and then we have the ability to kind of drill down into each department as we feel like we need to. And it might be something that when we get to the committee of the whole, you might consider in terms of the presentation of the information as well. Just a thought. Any comments or questions? Supervisor Peavy.
Yeah, I like your suggestion, Supervisor Long. That's the first thing I do is I go through the whole thick book and just look at the summary of each department. If we had a two-page summary, it might make it easier just to, and then obviously, like you say, if you got a question, why is this one up or down, and then we can drill into it. But I know it would be hard to do with this system, but it would be very helpful to have a summary page, yeah.
Other comments, questions?
I agree with your thoughts on that too. Plus it'll help me keep my meetings shorter too, so I can.
Okay, any other questions? We'll move on to the last item, number 8, resolution charge back illegal real estate taxes.
Yeah, I'm going to ask if Corp Counsel wants to take this one. He always likes to talk during the meetings, so.
So this is an annual exercise that counties do. Typically bring a resolution either in October or November, declaring certain taxes to be illegal or incorrect. And then what happens is that those taxes are charged back to the taxing jurisdictions so as to make the county whole on those. There's actually just a few this year. Reasons for declaration of incorrectness or illegality could be legal description, properties not subject to taxation, double taxation, etc. So this is a fairly small list.
So these are amounts reimbursed back to the county from the municipalities. Am I understanding that correctly?
Correct. They're charged back to, we buy the amount of the taxes, and then we're the conduit for collection. We then, because we declare them to be illegal, we charge those amounts back that we've bought back to the taxing jurisdiction.
Yeah, this total will be in the total tax levy for the county of the 30-some million dollars. It's going to include, the $1,000 or so that we have on here.
I'd move
Supervisor-
to accept the resolution.
And second, Supervisor Peavy. Any further discussion, questions?
Supervisor Ard. Yes. Supervisor Long.
Yes.
Supervisor Peavy.
Yes,
Supervisor Peterson.
Yes.
Motion carries.
Okay, keep this moving. Request for future agenda items. I actually have one that I'd like to include at some time in the future, something for you to think about. I've found that the budget process, it's kind of hard to get so much information in such a short period of time, because we'll have the committee of the whole in the middle of October. Then a couple of weeks later, we're going to vote on the budget. And I've heard a lot of times it's too late to make changes and that sort of thing. And I'm wondering if there may be opportunities or approaches for us to maybe not necessarily accelerate the process, because I know that there's a lot of information that you don't get until later in the year to really start formulating that budget. But I'm just wondering if there may be opportunities for some supervisors on the board to be a little more involved a little earlier in the process. That might bring a little more information to the surface and might make the process a little clearer. It might bring a little credibility. Not that you're not credible. I didn't mean that, but. So it's just something that I encourage you to think about as we go through this budget process over the next 2 months. if there's maybe ways that we might be able to improve it or accelerate it, or maybe be a little more involved a little earlier. Just food for thought.
My thoughts, I don't know if Supervisor Peavy would agree with me, but having been under a administrative coordinator when the committee had the budget, I can tell you that extensive, long hours of meetings, books that thick, quite frankly, my head was swimming by the end of every day in that, and I think it would be very complex to accomplish, but that's just my thought.
And we can put it on a future agenda if you guys want to discuss it further, so. Yeah. So you want to do it after the budget process finishes, like maybe the December agenda or something? Okay,
Talk about.
okay. As soon as that happens, I will put it on.
Okay, any announcements or correspondence? All right, well, I'll call the meeting adjourned, and our next meeting will be on Tuesday, October 20th at 5 o'clock.